Hey guys, welcome to a new video, and in this one we're going to be talking about NAV erosion, YieldMax NAV erosion. Is NAV erosion real? No, it's bloody not, and I'm sick of hearing about it. No, I'm just kidding. There is evidence to show that some of the YieldMax ETFs do suffer from NAV erosion or NAV decay, and that's what I'm going to talk about today. But before we get into it, I'm just going to talk about what got announced yesterday, which was Group D distribution. So that is most people's favorite fund, which is MSTY, which is my biggest holding. $1.47 announced for MSTY yesterday, and a little bit disappointing. I think the feeling amongst the Facebook group and amongst the community was that was a little bit underdone. People were looking for the $2, but you're not always going to get $2. And the fact is that MSTY and MicroStrategy haven't had a really good month. Bitcoin was doing well, and then it's kind of stagnated, and it's kind of actually, I think it's gone down slightly to it's now trading around $104,000. MicroStrategy had that lawsuit filed against it. Michael Saylor's been tapping the ATM, buying more Bitcoin, and that usually creates a bit more, usually creates a bit more sideways action or even downward sometimes. So until that Bitcoin then gets added to the balance sheet, and then it's like Bitcoin starts growing, and then it's like gangbusters, we're on here, let's go. But still 147, considering what's happened this month, I think it's pretty good. I'm okay with it, and for me, I'm still making decent money. I cannot argue with this as a weekly income. Group D is my biggest week because of MSTY, and then I've got shares of AIYY, SMCY. I really like the SMCY fund. It actually did better than MSTY in terms of distribution percentage this week, and I think I'll probably be buying more into that on ex-div date, which is today or tomorrow, depending on where you are in the world. XYZY, this is a new fund for me. I bought it in the low. They announced their annual earnings a few weeks ago, I think it was, and it dipped down to that $9 mark. I bought in then, bought pretty low. It's back up over $10, and I'm pretty glad I did because it's good distribution and it seems to be bouncing back. So I've got a few shares in that, which is good. LFGY, very consistent, probably my favorite weekly fund, as I normally talk about. YMAG, again, a great week, and ULTY. And we'll be talking more about ULTY or ULTY in this video. So let's get into it. NAV erosion, what everyone likes to discuss. Okay, so NAV erosion. One of the most talked about things, I think, in these YieldMax ETFs is NAV decay, NAV erosion. But what is NAV erosion? It's essentially NAV stands for net asset value, and that just means that if you buy at $20, say you bought Coney at $20 and it's now worth $8, your share price has declined. Your net asset value, the amount that you invested, the total amount, the total value amount locked in, has gone down. It's gone from $20 down to say $10. Your net asset value has halved. But of course, these are income ETFs, so we have to allow for distribution amounts as well. So the first thing I did was ask ChatGPT, of course, what is NAV erosion and what are the YieldMax ETFs with significant NAV erosion? So when NAV erosion is seemingly an issue, and it comes up with these 5. And I actually don't agree with all of them. So that's why you've got to be a bit careful, ChatGPT, because, for instance, TSLY, it started high and they had some issues, and then they changed things around. And so TSLY, it has had NAV erosion if you look at it kind of like that. But the thing with TSLY and what with all of these funds is that, does it have the ability to bounce back? Is it just that the underlying stock, so Tesla in this instance, has had a decline because of Elon Musk, because of him being in Doge, because of all the drama with Tesla? These are things to do with the underlying stock, not to do with just YieldMax ETFs decline. It's to do with the underlying stock as well. And does that underlying stock, and therefore the ETF that tracks that stock, have the ability to rise up again and appreciate in value to get away from that NAV erosion, to appreciate back up again? And that's, for me, the most important thing. So when you look at Coney, it says that there's NAV erosion, but that's because of the Bitcoin price action. It went from a high down to, because we were in highs in terms of Bitcoin in December at $108,000, and Coinbase is very largely tied to Bitcoin price action and crypto price action. And then since then, it's just dived. It's dived bad. It went down to 76,000 when all that tariff chaos was going on. And it started to recover, but it hasn't recovered enough. But for me, Coney is one of the ETFs that I'm bullish on, because I think Bitcoin will hit 200,000 at the end of this year. So for me, it's actually a good time to get into Coney, because it does have the ability to appreciate and go back up. Coney's sitting around the $8 mark, but I still believe it will be around $14, $15 by the end of this year. So for me, Coney is not one that suffers from NAV erosion. It just suffers from the underlying stock, what's happening with it. You know, Bitcoin, altcoins, crypto has been going down since this middle of December, as have a lot of stocks, because of the tariff chaos. So these are all the things that we need to take into account. But in saying that, there are ones that I do think suffer from NAV decay or NAV erosion. AMDY, which I hold, by the way. So I'm a holder of AMDY, and probably the worst YieldMax ETF that has ever existed, MRNY. It's pretty bad. It says approximately lost 75% of its value over the past year. I mean, it's a shit fund. Let's be honest. Anyway, if you hold it, it's actually shown signs of bottoming out. We'll have a look at the graph in a minute. If you hold it, there is maybe some hope. I don't know. We'll have a look and we'll see. But then on the other hand, I asked ChatGPT what YieldMax ETFs don't suffer from NAV erosion. And its number one is NFLY, which I was a little not surprised about, because I've talked about it before being a very consistent performer. Its NAV has barely changed, actually, since it launched. MSTY, NVIDIA, PLTY. I think we'd all probably say MSTY, PLTY. They're probably two of the best YieldMax funds at the moment. MSTY hasn't been doing very well, again, because of Bitcoin price action. NVIDIA's actually been doing pretty badly, so I'm surprised that that's in the top 4 or 5, because it's just not been doing well for the past 6 months. But anyway, it's still up there, and NFLY, and we'll talk about these in a bit more depth now when I go to the chart. So let's head over, and we'll do this by 1 year. So we're on MRNY to start with. Now, this is probably, in my opinion, the ETF that suffers the most from NAV erosion. And this is what when people, talk about NAV erosion, I think they're quite loose to kind of use that term. They band it around like Coney is going to go, it suffers badly from NAV erosion, and there's going to be a price split and all this sort of stuff. And I don't know if I buy into that, really, because for me, NAV erosion is when it starts high and there's no real opportunity for the price to increase during this time. Now, we have to take certain considerations into fact here, like the tariff chaos in April, but it was barely a blip in MRNY. So from the start, we got in I think it would have been, let's go all time. All right, so you can see there was a bit of upside here. It went from 18 to 23. That's pretty good. $5 in price appreciation in terms of share value. And then it actually was doing all right for its first, I don't know, few months. And then it's just gone down and down and down. And so for me, I mean, if you'd got in here at $20, $21 and you're just seeing this decline to $2.60, that's like 80, 90% of your investment gone. And you may talk about distributions and say, well, I'm still earning distributions. But of course, your distribution is categorically aligned to the share price. And what I mean by that is that if you're up here, you're getting, 50, 60, 70% distribution. Well, it will say here, actually, you're getting a 94-cent distribution amount. But then when it declines, that distribution amount declines with it. So 40 cents in November. And then down here now, we're down to 12 cents. 12 cents a month in distributions, because the distribution is directly correlated to the share price. So MRNY is probably evidence that NAV erosion does exist within YieldMax. And is that to do with the underlying Moderna stock? Probably yes, but also because the upside is capped, and the downside isn't. It's just going down and down and down. So, and the distribution is going with it. So you could say it's NAV erosion, or you could just say, the underlying stock hasn't done well. It was a bad investment. I don't know, but I would say that if NAV erosion is a thing, and I probably would say that in this case, this kind of proves that it is. This is the one that you would look at and be like, yeah, NAV erosion exists. The other one, and that I hold, AMDY. Now, I got in, like, people were kind of bullish about AMDY, but it's really just been in a downwards trajectory ever since I got in. Let's just have a look at what my average price is on AMDY. I'm at 11.31. All right, so I got in, actually not too bad, like around about here. And so around that time, we were getting like, it went from an 80-cent distribution to 30-cent, which is crazy. And since then, it's just gone down and down. It cannot recover what it takes out of its distribution. So it's just going, it's a downwards pattern. And that, I guess, to me, would be classified as NAV erosion as well. But there is some hopium here. There's a little dip. This was obviously the tariff. So everyone was like, let's just change this to 6 months. Everyone was kind of getting absolutely destroyed around this time. This was the bottom, and it has recovered. It's gone from 6 to 760. And I actually think that AMD, the underlying stock, might do all right this year. So it'll be interesting to see if it gets back around to this $9 kind of $10 mark, and therefore shows signs of recovery. But to me, if you look at this long term, that still looks like NAV erosion, so to speak. And then the next one, ULTY, ULTY. This is a very popular fund in the community. I hold it myself. I actually have quite a bit of ULTY. Let's have a look at how much I've got. 1,300 shares. That isn't small. So, and I have an average price of $10.14. Where was I? $10.14. So $10.14. It's around about here. And so I got in, and it's just gone down and down. I got in and it went down. It just never recovered. It couldn't. And then, of course, we had the tariff chaos, so everything went down here. So you've got to kind of treat that as an anomaly. But even before then, look at this. From all the way up here, $15, it's now worth $6.27. I guess, the market dipped and we have had a bit of a recovery. But to me, I have not been, normally when I get in at that kind of price, I'll be dollar cost averaging down to reduce my average cost price for the fund. That's if I believe in it. So like MSTY, PLTY, SMCY, NVIDIA, maybe even TSLY, I'll be dollar cost. Say I get in here, then I'll be dollar cost averaging to reduce my average price. So it's like down here some. But I just don't believe that this is going to recover. ULTY is going to recover as well as PLTY will, as well as MSTY will, or has as much upside opportunity as those other ETFs. So like PLTY, let's move on to it now. Let's just go, it's a newer fund, so let's just go all. Right, started on $50, and look at this. This is serious upside opportunity. This is insane. Like $50 to $94 in how many months? 4 months? Crazy. Now that's not NAV erosion. That is the underlying stock performing bloody well. And so the YieldMax ETF, BLTY, can capture some of that upside, not all of it because it's capped, and also pay out distributions. So here, it went from, if you'd invested here at $50 and got to $94, so you're up like almost 100%, and you're already getting 293 distributions, 593. This is distributions on top. So PLT. So what I want to be clear about here is, from my opinion, and this isn't financial advice, I'm just a dude behind a computer talking about my thoughts on YieldMax and NAV erosion and all this kind of thing. So don't take this as financial advice, please, whatever you do. But PLTY is a classic example of that. It completely depends on the underlying stock, what happens to the ETF, the YieldMax ETF. You just can't hide what's going on here. Even in the chaos of these tariffs, so it went from $90 to $52, which is crazy. And people were like, well, that's NAV erosion. It's not. The whole of the stock market was down big time. And because Palantir is more volatile than, say, the S&P 500 or the NASDAQ, then it has more potential to fall. But for me, that's not NAV erosion. That's just the stock market absolutely tanking. That's the S&P 500 going down 20%. That's the NASDAQ going down 20%. The stock market just had a massive meltdown. People thought we were going into a recession. That's how bad it was. But then look at the recovery, $51 to $71 again in like a month and a half, 2 months. So NAV erosion, in my opinion, does not exist with PLTY. And that's why you have to be really careful about when you buy, what you buy. These YieldMax ETFs are not created equal. You cannot be buying into, I hate to say it, ULTY, which I own, and MRNY and be like, oh, and at the high, because you're just going to get wiped out. And because maybe NAV erosion does exist for those funds, but it doesn't for some of the others. So it's not a YieldMax holistic thing. It's just to do with some of the individual ETFs within the YieldMax sphere, if that makes sense, in my opinion. Okay. So MSTY. MSTY's the same. Let's go 1 year. Was that 1 year? No, it was high. It went down. Bitcoin price action is very cyclical, isn't it? So it has bear markets and bull markets, and it's very volatile. That's why MSTY does so well, because Bitcoin is volatile, MicroStrategy is volatile. That's how it's able to pay us such premium amounts in terms of monthly income. So that comes with the fact that it's a very volatile stock. It's a volatile ETF. It's going to go have big highs and big lows. It's going to capture all that downside, but it's not going to capture all the upside. But because it's such a high growth space, MicroStrategy is essentially a leveraged Bitcoin play, 1.5 to 2x leverage of Bitcoin. When Bitcoin does well, it's going to absolutely skyrocket. And so for me, there's no NAV erosion. It's just replicating the price of Bitcoin with an amount of leverage to go with it. But yeah, so this is just crazy price increase. So if you'd got in here and you were now, you'd be like, that's NAV erosion, that's NAV decay. In my opinion, it's not. Now is just a great time to be piling into MSTY, because I believe that Bitcoin is going to be on 200K by the end of the year. And I believe that MSTY will probably be around the $35, $40, $45 mark even by the end of this year. I still believe that. Could be wrong. No one has a crystal ball. I don't know, but that's, according to my research, that's what I believe. And so that's my conviction. That's why most of my money gets reinvested back into MSTY and a little bit into PLTY when it's dipping. But I think PLTY is slightly overvalued at the moment, so I'm not putting a lot of that into it. Whereas MSTY, big opportunity right now. I think Bitcoin's about to break out. M2 money supply, global liquidity is actually pumping. I think that MicroStrategy is going to have a big second half of the year. So that's my position on that. NFLY is the other one that doesn't really have NAV erosion. It launched, it launched like so long ago, 2023. This is one of the oldest ETFs in YieldMax. And so it launched $20 and it's now $18.60. That is down $1 or so, but that is volatility. That's creating income. You're getting your distributions, and the share price is barely changed. It's gone down, it's gone up, it's gone down. That's not NAV erosion. That's just NFLY doing pretty well. Now, so I don't have any NFLY, but if I feel it's a bit more of a conservative play than MSTY and PLTY, they're a bit more volatile. But I think that's probably one that I would potentially get into if I wanted a bit more of a conservative play. I don't think its distributions are as good, but its NAV holds well and it still pays you distributions. So I think that's a great option if you're looking something a bit more less risky, so to speak. All right, CVNY. I got into this. You could call it luck, or you could just call it good timing. Probably a bit of both, but I got into this at $27, all the way down here when tariff chaos was kicking off. People were in meltdown. They were like, "Oh, it's a recession, and what's Trump doing?" And Trump was, from my research, Trump was just doing all this as a negotiation tactic. He was trying to pressure the Fed to reduce rates, as he still is. He was trying to negotiate with China. Probably didn't really care about the other countries. But anyway, I thought it was my belief that the market was going to bounce back. So I was piling money in around this era, this time of year. I just sold my caravan, came into a bit of money, was piling money into, well, I got into CVNY. This is when I got into it. I was piling money into MSTY, CONY, PLTY, SMCY, and NVIDIA, and also S&P, also the underlying. So MicroStrategy. I should probably caveat this by saying I do invest in the underlying stocks. So I invest in MicroStrategy. I invest in Palantir because to me that offsets any NAV erosion. If you were to, everyone compares MSTY versus MSTR, and it's like if you'd invested in MSTR instead of MSTY, you'd be up a lot more. But for me, I'm all about monthly income. I'm all about creating a better lifestyle for myself and my family. I've got 2 little kids. I want to spend as much time with them as possible. We want to go on holidays together. I barely have to do my work, my profession anymore in terms of what I used to do. I just do this sort of stuff. And it's amazing. I just invest and then I'll get a monthly income. I live off a portion of it and reinvest the rest. And that is an amazing opportunity. In my eyes, that is way better than investing in Mr., which you would then have to sit on and wait and then sell, and then there'd be tax implications and you're not getting a monthly income, and then you don't actually have the stock. You've got to buy into something else anyway. For me, I'm loving these YieldMax ETFs. You do have to buy the right ones at the right time and at the right prices. And that's what I did for CVNY. I timed the market well, got a bit lucky, got it at $27. It's now $45. There is no NAV erosion on this fund. I'm telling you, it is going gangbusters. And look, is this all? Yep. So it started at 50. Of course, it was a bad time to start because this literally a couple of weeks in is when all that chaos of what Trump was talking about kicked in. All the tariffs, market went crazy, and now it's recovering. It's gone from $27 to $45 in 2 months, and its distributions are amazing. $4.56. Remember, I got in at $27, so that's like 100. What is that? I've got it over here. I'll just show you quickly. This video is going to be long. I'm sorry. What are we talking about? CVNY. Here we go. My average price is $27.88, 1,800, and I'm sorry. We'll go up here. CVNY 27.88. So my net yield after taxes was 167%. Before it was 190, almost a 200% return, because the share price had increased so much within such a short space of time, and the distribution price amount had increased with it. So that's my thoughts on it from a chart perspective. There are funds that do seem to suffer from NAV erosion or NAV decay, and there are others that don't, in my opinion. PLTY, MSTY, NFLY, CBNY. Stick to these funds and you will be in a better position, not financial advice, please, to counteract that NAV erosion talk. All right, last thing I want to touch on is this kind of reinforces it. So this is those 6 that I just talked about in that chart over the last year. What is the total return? So the total return is their share price as well as the distributions. What's your return from your money? And as you'll see, PLTY is the best, 116%, MSTY 97%, and NFLY, as we talked about, 76%. A bit more of a conservative play, but still really good. Like, so if you had invested, 100 grand, you'd be up 176 grand for NFLY, and you'd be up 216. I can't do the maths, but you're up a lot of money. So NAV erosion, in my opinion, not a thing for these 3. But then for ULTY, which one's ULTY? ULTY is in the green here. So ULTY is interesting because it has a really good high distribution rate. And so distributions almost counteract the depreciating NAV, the depreciating share price. It's able to pay such high distribution amounts that it almost keeps it in the green. You're almost profitable. So you'll actually be up 10% even with the depreciating share price, because distributions are so high, it's still up 10%. So I'm happy because I'm an ULTI shareholder. But for me, it still is an example of NAV erosion in that fund. And then AMDY, you're down 20%. And then, of course, the worst of all, MRNY, it's awful. Stay clear of it. 75% you'd be down. If you'd put in 100 grand, you'd be down to 25 grand. That's works. That makes sense. And then this is 1 year. So PLTY only launched in October. So that's not even their full return. Now, MSTY didn't even do well for the last year because it's had that high Bitcoin, it went down. So actually, if you do all-time return, MSTY absolutely smashes out of the park. You'd be up 284% from, when did MSTY even launch? Around about here, March. So literally a year and a bit, 284% with share price and distributions. NFLY and PLTY, similar, up 122% around those areas. And then, of course, the other three, which I believe do suffer from sort of NAV decay and NAV erosion down here. So does NAV erosion exist in the YieldMax world? In my opinion, yes, to a certain extent. Certain ETFs suffer from it. The ones that I've talked about there, AMDY, MRNY, ULTY, suffer a form of NAV erosion. But there are some that don't, and therefore you should do your research to make sure that you try not to invest in the ones that do have it. You want to invest in the ones that are going to appreciate and that have upside opportunity. And for me, that's PLTY, that's MSTY, and actually I think Coney's good at a good price at the moment. I'll be getting into Coney because I think price action is going to go up. So you need to do your research to make sure that you're not going to lose all your money that you've invested into these things, because they are not created equal. But this is not financial advice. This is just my thoughts. Let me know what you think. If you agree, let me know in the comments. And please, if you like this content, give me a like and hit subscribe. I'd never say that sort of stuff because I'm pretty new to this. But I don't know if people are enjoying these videos or if you're getting anything out of it. If you want me to do videos on certain topics within YieldMax or whatever you want to hear about, let me know and I'll see if I can create a video on that thing. All right, have a great day. See you in the next one.